Hello everyone, today is Friday, January 21st. My name is Evan. Welcome back to our weekly stock market analysis video series. If it's your first time tuning in here, welcome. Thanks for joining us. Thanks for being here. Here's how these videos work. We break up our analysis into two parts, and in part one, we look at everything that went on this week in markets. We go beyond price action. We look at things like the term structure of volatility or sector performance, market internals, credit markets, and really sort of use that to pick out things that look interesting, different, notable, noteworthy to inform our analysis. And then in part two, we jump into the charts, we look at price action, we break down trends and try and make sense of where markets are headed. So hopefully that sounds good to you. Let's jump into this week's video. I wanted to start with just a quick little history here, because as I was sort of putting together some notes for today's video, everything is pretty much bearish out there. Almost every data point right now looks ugly or just bleak. And I thought about, the new viewer here that was kind of tuning in, or even if you've kind of check in once or twice with our videos a month or something like that, I wanted to just sort of rewind the tape here a little bit on some of our past videos, and I just pulled the headlines that we've been using for some of these, some of our Friday video series. And what you'll notice is it really started in November, but I didn't want to pull all those headlines. But basically the end of November, right around Thanksgiving, is when we essentially started to get much more bearish evidence starting to creep in. And you can see, with these headlines back here on December 10th, after this bounce, is now the right time to panic. December 17th, bearish equity market evidence is on the rise. 12/23, this was right at the holidays. This was the one little piece of hope, optimism I think we had is as the S&P 500 broke out to those fresh highs going into the end of the year. That was where we got, okay, a little bit more optimistic for the upside. But then we had the January 7th ugly start to the new year for stocks. Last week's video, more bearish warning signs are adding up. And so the reason I sort of highlight this here is to basically make the point that hopefully the action this week wasn't too much of a surprise for you. Hopefully you were not caught off guard with the selling pressure out there, because I think we've been sort of keeping an open mind as to what could unfold here to the downside, right? We've been talking about some of the warning signs that are out there, and without a doubt, all sell-offs, all corrections, anytime things get nasty, it is always a uniquely scary time and event. And nothing ever is exactly as you may remember it from last time. There's always some new wrinkles of why stocks are selling off and why this time could be the end of the world, right? That's always the feeling. But ideally, you are a little more prepared after sort of, keeping up to date with these videos. And I thought that was worthwhile, sort of just dialing back and showing maybe how we got here. And certainly you can go back on YouTube and listen to some of these older videos and look at some of the evidence that we were, highlighting over the past weeks. And maybe you want to start incorporating that into your own analysis and research on a week-to-week basis. So let's jump into it here. So if we take a look at the headlines from this week, S&P 500, largest weekly decline since 2020. And that's not that long ago. It's over a year ago. But what it does tell us is that this was already a bigger, weekly decline. We're already getting larger magnitude sell-offs 2.5 weeks into 2022 than we did all last year, right? And again, it shows us how good we've had it last year. I think I put out a tweet a few weeks ago, basically saying something along those lines of like the largest correction in the S&P 500 for last year was like 5 or 6%, which is unheard of. And we're probably going to pay the price here soon. And lo and behold, here we are paying the price of such a smooth ride to the upside last year, we're seeing volatility now to the downside. So second point, long-term equity trends under pressure. So we're actually, that's almost a nice way to put it. We are breaking down from some of those longer-term trends that have been intact going back multiple months, some even multiple years. And we also now are seeing the term structure of the VIX enter backwardation. What that is telling us is, once again, and we're going to talk about this throughout this video, there is lots of fear out there now, right? For good reason, but there's a tremendous amount of fear out there. So let's take a look at some of the numbers here. If we look at this right-hand column, this is just a 1 week change on the major markets here. You can see basically everything was 6 to 8% down. That was for the US, and that's pretty horrendous there. That's going to, put you in one of the, the top percentiles of down weeks basically for stocks. So really everything was getting hit this week. And again, finally seeing the market cap weighted indices get really under pressure here. We've seen individual stocks, we've seen small caps break down, we've seen high beta and growth and momentum break down, but we hadn't really started to see the indices break down, and you're starting to get that now. I will also highlight once again that we are seeing some relative outperformance here from world stocks. So if we look across or outside of the United States, you're starting to see, continue to see some relative outperformance versus the United States. If we take a look at market internals, it was basically the worst thing we've seen here in quite a while. Very, very bleak picture here. We had almost 1,000 net 52-week lows being made this week. So highs minus the lows, and you can see that number was about 1,000. And if you look at the AD line here, summed up every single day, minus 7,800. That's a very, very negative week. They were basically out there selling stocks aggressively, relentlessly, every single day this week. So lots of exodus from sort of the market as a whole this week. We see the percentage of S&P 500 stocks over 20 SMA is down to 17% right now. So if we take a look here at this graph, nothing pretty about it. That downtrend is now fiercely back into motion. Remember, we talked about this, again, slight kind of hesitation here, potential optimism as we moved sideways here. The market was waiting to see kind of how things were going to shake out. And then you can see back to back to back to back to back, more negative breath thrust to the downside. So again, this is a cumulative chart view of 52-week highs minus lows. Basically, you can see just selling pressure continues to intensify as we go into the weekend. If we take a look at sector performance, every single sector in the red this week. We saw energy, which has been the holdout, continue to try and hold out. It was down just 1% this week. It's up 14% for the past 1 month of trading. So extremely impressive returns there and holdout there. But negative this week, consumer staples and utilities were the second and third spot, Hallmark and then healthcare in the fourth spot, which is basically your classic top 3 defensive sectors. And on the downside, we see consumer discretionary, we see financials, we see materials down 6 to 8.5%. If we take a look at correlations here, you can see a lot of bright green on this chart, and that is usually symbolizing heavy correlation and generally lots of volatility, because when volatility spikes, you tend to get lots of things correlating with one another, lots of things trading as risk assets. There's not much differentiating between markets. There is just basically, I want risk or I don't want risk, and you either fall into that bucket or you don't. And right now, people do not want risk. So you have all of the equity markets basically trading with one another. You see Bitcoin in here as well, very highly correlated to what equity markets are doing. So it's just treated as a risk asset. And you're seeing gold and some of the precious metals here inversely correlated, so a little bit of a safety haven there. You are still seeing USO, which is acting as a safety haven. So this oil trade, this commodity trade, this inflation trade, still pretty much intact here, at least for oil and at least for right now. If we take a look at VIX term structure here, volatility term structure,
And there are more refined ways to sort of pull this chart, but basically, and I think we should be in backwardation right now. This chart doesn't quite show it, and I'd have to look at how all the final numbers printed out. I usually hit record on this before I have some of the final numbers, but basically what we're seeing here is a big spike in volatility. So we're going into the weekend nearly a 30 VIX, and it is notable though. So this is a spike in volatility, but this isn't the big spike that we've been seeing. This is more of a gradual move to the upside, a little more gradual than we're used to, right? For the most part, in 2021, we saw the VIX jump like 80% in 5 days. That was the event, and then we sort of declined from here. This time around, it feels a little different. We are sort of like, adding a couple of points to the VIX each and every day, and now we're up at 29 and it looks firm. So there's this interesting kind of notable little character change here that I'm observing, pretty anecdotal, but worth kind of pointing out. Regardless, we're up at almost 30, and basically the front month is priced the same as future months, which is essentially telling you that there is a fear event going on right now, and there is, extreme rich premiums that people are paying for protection. If we take a look at dollar and commodities here, you can see dollar index was up, gold was up, silver up 5%, big move for silver. Bitcoin getting hammered here with equity markets. Ag was up, WTI crude oil was up. Natural gas is extremely volatile right now, is down 7.5%. So what you're basically seeing here though is you're seeing a stronger dollar, but you are still seeing some of the commodity plays here still continuing to work, to act as a little bit of a safety haven right now. And that behavior is basically continuing. If we take a look here at the report card, there is nothing to like. Everything was basically, negative across the board. There was really no saving grace this week. The saving grace is probably the fact that everything is so bad that you're due for some type of bounce. And this brings me to some of the positioning here, and specifically the shorter term strategy here, which you're seeing is actually 100% invested right now. So, after hearing sort of all of this evidence that just shows how negative things are, you look at this trading system and you say, why in the world is it 100% invested? And so the key insights here is that this is a very short-term trading system. It is a counter trend trading system. So the bulk of this exposure, so like 60 odd percent of this, all came from buying here on Friday and on Thursday. And so right at the end of the week here, as fear really started to pick up, as that acceleration lower started or continued, we saw our Lamerick trading strategy here really start to pick up some additional exposure, and it's going into the weekend fully invested right now. So this is, again, a more advanced strategy. I don't recommend just doing this blindly. It is picking certain stocks. There's risk management that is layered in here, but what you're essentially seeing, right, is the counter trend nature of this, looking to take advantage of some short-term potential inflection points. And if we get a multiple day bounce heading into next week, that will probably be the end of it, and you will see this unload most of its exposure. So that is, something very much worth paying attention to and noting. Don't try and duplicate this, on your own. Don't try this at home, as the old saying goes. Our top system here, Merlin, is continuing to essentially de-risk. So as I sort of talked about last week, what I would expect this to do, as I mentioned, was essentially, distance itself from the market, raise some cash, and get more defensive. That's exactly what it did. It was, 80% invested, I think, last week, or 70% coming into the week. And you can see it just continues to raise cash and slowly sort of de-risk from the market. So that's the way it's designed. It's looking at things a little bit longer term. It's not trying to do all of this, very, very short term stuff like the bottom trading system. And as always, if you're interested in these types of systems, we have a new revamped $1 trial on our website, and it comes with a lot more education and insight into how these things work. So if you do want to learn more about them, click that link appearing in the top right hand. And with that, we'll be back here in just a second with some charts. Okay, we are back. We've got TC 2000 open. We have our custom smart trend filter applied to these charts. So these are the multicolored green, yellow, red dots you see. And it measures price and volume over time, and it helps us just objectively determine trend and trend strength. Price itself is denoted as the white dashed lines you see here, and we're looking at a weekly time frame. So obviously lots of damage out there from the weekly performance perspective goes. And we can see in all cases now, we got basically a thrust below our long-term smart trend filter here on all of these charts. So if we just start with the S&P 500 in the top left here, so notice we came, really sort of slicing through this. We have been effectively above this since, 2020. And we've had a couple of tests. We had a slight test here in late October 2020. We had another brief one here in September of 2020, but nothing that looks as extreme as the move we saw this week. Notice we don't quite have a sell signal printed just yet. The idea behind this indicator is that it is meant to, find confirmation, is to wait for some confirmation, is to, confirm that the sellers are in control here. So hopefully, hopefully it depends on what direction you are most exposed to. If you're still on the long side of this market, then hopefully you see a recovery here. And if you are, wanting the world to sort of burn here temporarily, then, you want to see this transition lower next week. But obviously right now it's positioned pretty, significantly below that smart trend indicator. Same thing for the Nasdaq. You can see again the big sort of move below here. Nasdaq has been, in this transition phase for quite some time. So this has been saying like, hey, there's some mixed signals here to pay attention to. And that now certainly expressing itself to the downside. We'll see if that transitions lower next week. And then of course here in the Russell 2000, we finally got it. We finally see a sell signal here produced in the Russell 2000. It has been chopping around for what seems like forever. And we are finally getting that breakdown here. We got our first sell signal since the COVID crisis back here in 2020. And so you can see again, the last time we produced a sell signal was back in March of 2020. It lasted for about 6 weeks and, obviously had a severe decline that accompanied this signal. So that is clearly in the seller's favor. You can see world stocks down here, bottom right, neutral, still chopping around. Now, if we go down to a daily chart, you can see everything here is in a sell signal, except for international stocks. That's still actually hanging on here. Again, there is relative strength out here. If you're willing to do some work on international stocks, even specific countries, there are things that are holding up better than the United States right now. And if that's your cup of tea, there is probably some alpha or at least some more protected beta that you could have exposure to right now if you're willing to do some of the work over there. But if we circle back to the United States here, you can see basically everything in a downtrend here, and basically broke to a confirmed sell signal on the daily chart on Tuesday of this week in all of these markets. So let's take a look at some price action here. Everybody loves to look at levels and kind of measure and map a lot of what's going on here. First things first, let's actually just go to a weekly chart. Let's take a look at what's going on here. I think the SPY. Yeah, so I threw some channels on here, some trend lines loosely drawn. Again, they're just really for reference points, but basically here you can see that this channel that we have been in for quite some time now, since, let's define it, to the end of the end November time of 2020. We've been sort of riding in this nice orderly channel here in the S&P 500. We basically appreciated, 40% kind of bouncing up and down in this nice little neat channel here. And this week was the week we broke down from it. So we essentially kind of thrusted lower off of that trajectory. We did it on heavier volume. And if we wanted to, again, just sort of measure and map some slopes here of maybe where price could find some support, we're kind of coming back down to the lower end of this channel here, which, objectively doesn't have many touches. And I'm not really using this at all for any strategy purposes, more so just illustrating purposes of kind of where we are, where we've been, and where we have the, kind of potential to come here if we continue to break down. So this upper channel violated, broke through lows, heavy volume thrust down here, and now we're kind of resetting back to here. If we take a look at the Nasdaq 100, you can basically see, this has been the channel that we've been in for a year and a half now. And again, you can see this week was the high volume snap and break of this channel. Now, lots of folks may want to throw, Fibonacci's on here and see some type of retracement levels from, the COVID lows. And you can certainly do that. I'm not going to do that in this video. I want to go a little bit closer here on some of this, on this near-term price action. So if we go back to, let's switch over to the S&P 500 cash settled market, you can see we sort of puked everything out. Apologies for all that noise on the market data stuff. 4,400 is where we closed here into the end of the day. And you can see now we're down 4 sessions in a row. We're down, let's see, in about 7 sessions, we're down about 7% in the S&P 500. And once again, we're now coming back down into some of these October lows. So if we kind of think about some of the prior levels that we talked about in these past videos, we did talk about wanting to see, the S&P hold above 4540 or so. This was kind of the big crayon zone right in here that we wanted to see this market hold above if it was going to kind of hang in there and act decent. And obviously that's not the case. So when we look further at some of these old levels, I think the elephant in the room now is the October lows right in here, which is around 4,300 in the S&P 500. Feels like there's a bit of a magnet down there to go test that. That would be approximately, 2.5%, which at the rate that we're going right now could be Monday's session if price continues to sort of just cascade lower here. But this would be a reasonable spot and next kind of area that I would expect the market to go kind of probe and see if there's value buyers coming in around 4,300 in the S&P 500. If you start to get below there, then, you've really got to look back a lot further, and risk really gets, opens back up in a more frightful sort of sense when you start getting down into the upper 3,900s or the 3,000s. So for the S&P 500, we're in this kind of cascade event. We've got support down here, another couple of percent below us. We can put on Bollinger Bands here, and we can note that the S&P 500 is basically traded almost entirely below the lower 2 and 20 Bollinger Band today. So again, that band is stretched. The fear is out there. The market is, quote unquote, oversold. And we have to, just remember that we've covered a lot of ground here to the downside, but oversold doesn't mean a whole lot when you're in a crash mode type of situation, when you're in a panic liquidation type of situation. So notice, again, just if you're contrarian, if you're, looking at something like our Lamerick trading system is, if you're looking for that stretch, you've got this stretch right now. So that is something you can keep in mind. If we take a look at the IWM, you can see, keeping the Bollinger Band view on here, you can see we traded basically entirely below the lower 2 and 20 Bollinger Band. We have been below it and closing below it the past 4 days in a row. The Russell 2000, so let's switch back to this view here. We'll go to this view here. This is the reality here of what's gone on in the Russell 2000. So you had basically this long sideways range. You had this textbook, right? And we only know this in hindsight, but we've got this textbook failed breakout where we had this one strong week above, and then we failed, came back into the range, and now we are breaking down on the bottom end of this range. So this was, a real sort of sad looking pattern here on how this all unfolded. But basically, you've got a year-long sideways range, and you're just breaking down now. You've got gap fills back here in the 160s. You've got lots of, levels to look back over here. If you're looking left, I'd say the old highs coming in January, right before COVID, or even, right in this area here around 172. That's Not saying we have to get there by any stretch, but that is clearly going to be a big area to pay attention to. You've also got this little pivot right in here that you could probably hang your hat on, which is around 193, which again is about 1% or so from where we are right now. So things could get, could spiral here. You want to be careful. You want to be cautious. But again, that rubber band, as we looked at with Bollinger's, has been stretched. Remember, when we're in these types of markets, we don't have to just go straight down, forever. It doesn't have to just be, 3% down every single day. It's obviously what we've had here the past 4 days. But what I would expect is, these violent snapback rallies that make it look like everything's okay again, and maybe the bottom is in, and then ultimately it rolls over, bear flags, and then, continues down again. So that's very much a behavior or pattern or characteristic that you could expect. Nasdaq 100, last but not least, if we go to that weekly view again, you can see there's the breakdown that we're just getting this week. And again, I highlight all of this because this is a potential week one kind of breakdown from this channel. But also, when you go down to throw on these Bollinger Bands here, you can see again, okay, closing below the lower 2 and 20. We're coming back into the October lows right now already for the Qs. So remember, the S&P 500, we're not quite there yet. We're still above the October lows. If the Qs, we're here right now. So this is the first stop where you want to see buyers kind of, step back in right around this 350 area. You saw extreme heavy volume come in on Friday. And, here we are. This is where you'd want to see the market kind of hang in here. Maybe a gap down to start the session on Monday, followed by a strong close. That'd be a good start and, would speak to some of this washout. The other thing I forgot to mention, I think at the top of the video, maybe I did or didn't, was option expiration. You had option expiration today. You can get a lot of exaggerated moves, especially when VIX is this high and especially when markets are moving this fast. You've got a lot of repositioning that needs to happen. And, that was this Friday. So that is really kind of the tour around the major markets. Let's hit on a couple of things and move fast here because this video is getting pretty long. So we got the VIX up here, up near the 30s. Again, I feel like the difference is you're kind of gradually seeing the VIX just close higher each and every single day versus, again, kind of like what I said at the top of the video, you had back in 2021, you just had these big 55%, right? 40-50% moves, spikes in the VIX that were basically 1 and 2 day events. And then we just kind of, deflated lower. Whereas this time we seem to be a little more persistent in the uptrend. So that is something to think about. I want to talk about TLT here, which is finally starting to catch a little bit of a bid. So there's basically been no safety haven to speak of. And you're finally starting to see bonds now catch a little bit of a bid. You can see the medium duration 10-year catching a little bit of a bid. Let me take off these Bollinger Bands. But still, it's been tough because you've seen the bond market continue to sell off along with equity markets. You've got gold, which did perk itself up this week. It was up about 1%. I still like GLD as a general positioning here. And I think it's, going to be one of the better places, at least in the foreseeable future for right now. So gold, bonds, VIX, I think those are the big things. Let's finish off here with some industry and sectors. I'm not going to go through all these. I did update this. So I had a lot of, requests come through on people that want this layout. So I'm cleaning it up. So I'm going to make this, I'm going to publish this as a download on the website. Basically here, obviously, nothing on the upside, nothing green, nothing bullish. I'll just expand this and you can see there were a good amount of stocks, sectors and ETFs that were notable to the downside. And you can see I put in these little, below in the 50 SMA or below the 200 SMA. So there's a dot where those are true. I'm not going to go through them in this video just because we've already run pretty long, but this is the full list. So, certainly do some homework this weekend. You can look at all of these tickers and you can, kind of page through these looking for underperformers or the weakest things to sort of, continue to beat up, let's say. So that's it. That's what I got going on for this week. It was tough out there. Lots of selling pressure. Hopefully you made it through in one piece. Take a deep breath, relax on the weekend, and let me know what your thoughts are. Leave a comment below. What are you looking at this week? Do you have any optimism there? I will say anecdotally, once again, it's actually tough to find a bull on the market right now. And you know, all for probably extremely good reasons that I would mostly agree with. But sentiment wise, and again, this is very anecdotal, I don't know anyone that's excited to, you know, about anything here, right? I think everyone's pretty doom and gloomy right now. And I think that's interesting, right? I think that is interesting that there doesn't seem to be really any optimism or much hope out there. So take from that what you will. Leave a comment though. Let me know what you're thinking. Are you hopeful? Are you optimistic? Are you buying anything right now? Are you still staying sidelined, creating shopping lists? Let me know what you're up to. And as always, thank you for tuning in every Friday, long form market analysis videos just like this. Have a great weekend, and I hope to see you back here next week.